and welcome to all the Year 11 students who are following the accounting coverage on this channel. Today's topic is prepayments under the heading Balance Day Adjustment. There's a topic being made on Balance Day. You can find the link below. Topics that also comes under Balance Day Adjustment are accrued expenses, income accrued, income in advance, depreciation, bad debts, and doubtful debts. The objectives of this session are to define prepayments, show the information provided in the timeline, determine the general journal entries, show the effect on the neutral balance, show the effect on the profit and loss, and the balance sheet. What is a prepayment? Pre meaning in advance of. Prepayment simply means payment in advance. These are expenses that have been paid during the year, but the amount extends to cover for the next accounting period. Other terms that are used are unexpired cost, expenses paid in advance, and prepaid expenses. Next is showing prepayments in a timeline. So the timeline is in purple. We have the starting of the accounting period and the ending of the accounting period, and in between this timeline we have our financial year. Now the blue line shows what have been paid, so it extends over this accounting period into the next accounting period. It also shows some advance payment, that is the payment that have exceeded this financial year into the next financial year. All prepayments, the excess amount at the end of the financial year must be subtracted because they do not belong to this financial year. Amount that is paid in advance is regarded as our current assets. So even though that we have paid, it's still our current assets. Next is to show the general journal entries for prepayments. We debit prepayments because it is our current asset, and we credit the expenses account because we have to subtract from the trial balance the excess amount. So in this red chart you can see it has been summarized there. Paid in advance, prepaid expenses regarded as asset, prepaid expenses debit, expenses account credit. So let us look at one example for prepayments. We have the extracted trial balance that shows insurance paid during the year is $550. Additional information shows that insurance paid in advance is $100. So that means from that $550 paid during the year, $100 belongs to the next financial year. So the questions are: show the effect on the timeline, the general journal entries, show the impact on the profit and loss, and balance sheets. So first of all, we have to show the information on the timeline. According to the timeline, purple line, we have the starting of the accounting period and the ending of the accounting period. It says the insurance for the year is $550 minus $100 paid in advance, which is equal to $450. Therefore, this year profit and loss should have insurance as $450. According to the additional information, it says that prepaid insurance is $100. That is in excess of the balance day amount. Therefore, $100 have been paid in advance and is still our current asset. Therefore, will appear in the balance sheet as insurance prepaid $100. Next is to show the general journal entries. Now we always debit insurance prepaid or expenses prepaid and credit the expenses account, in this case insurance. So that is the general journal entries. Note the credit entry for insurance. If we have to construct the insurance account, it will look like this. The amount of cash 550 actually come from the trial balance. So from the trial balance it shows insurance account 550. But according to these general journal entries, we credit insurance. Now insurance account, on the credit side we write down the name of the other account affected, which is insurance prepaid, and you write down $100. Therefore, when we calculate the balance carried down and the balance brought forward, the answer is 450. So therefore, in our neutral balance, we will be having insurance instead of 550, it should be 450. So now let us look at what we have done so far on the new trial balance. Now the old trial balance that came with a question, we saw that insurance was 550. That was the question, the trial balance that came with a question. Now the new trial balance, after the general journal entries, we will see that the insurance amount is not 550, it is 450. And we have a new account called prepaid insurance on the debit side. Because it's a current asset, we will find the current asset on the debit side of the trial balance. So in the new trial balance there will be two accounts. One is the insurance 450, the other one is the prepaid insurance $100. So now after this trial balance we will be constructing the final account. We have the insurance, it is an expenses, will go to the profit and loss account, and the prepaid insurance is a current asset, will go to the balance sheet. So the last two entries, as we have discussed, insurance will go to the profit and loss as expenses on the debit side, and insurance prepaid will go to the balance sheet under current asset on the left hand side. So those are the two entries we have just discussed in the last slide, and that's how they look for the profit and loss and the balance sheet. So let us look at the second example. Assume that on the 1st of July 2014, $480 was paid for full year rate expenses. The balance day fall on the 30th of December. Now note that the rate was paid for the full year. That means 480 is for 12 months. Let us construct the timeline to understand how much is supposed to be for this year. It says that 1st of July for the full year. So if it's from the 1st of July, it will extend right up to 30th of June. That is for the full year, that is the 12 months. But the second sentence says 31st December is the balance day. So we have the balance day. So now when we see from 1st of July, August, September, October, November, December 31st, that is 6 months. That means half of the year, half of 480 is for this accounting period, and the other half of $480 is for the next accounting period. So 1st of July to 31st of December, 6 months, that is this accounting period. And when we do the calculation, rate expenses is 480 multiplied by 6 over 12 months, which is equal to $240 for this accounting period, and the other $240 has been prepaid for the next accounting period. Now the general journal entries, like we have seen before, we debit the prepaid expenses, in this case prepaid rate 240 because it's a current asset, and we credit the expenses $240 because it will be deducted from the expenses that was paid during the year. And we will see that on the profit and loss. We see that rate $480 subtract $240, and the balance sheet current asset prepaid rate is 240. Note that the profit and loss, we keep it very simple. We do not show any information that is not shown in the question, so we just keep it simple, whatever the values that were given. So the rate is $240 for simplicity, and any other information that was not provided we do not take into account. So now we have profit and loss $240, balance sheet current asset prepaid rates $240. Now let us recap on what we have gone through so far. Definition for prepayments refers to expenditure paid in advance. Showing it on the timeline, we have an example given above there. We construct the monthly timeline in this case. Next one, we write down the general journal entries. We have debit prepaid expenses and credit the expenses account. Next, we prepare the neutral balance. In the neutral balance, there will be two entries, both on the debit side, the expenses, which have a value decreased by the amount in the additional information, and the prepaid expenses, of course, from the additional information. Next one is to show the effect on the profit and loss. We have seen there the expense account on the debit side. And lastly, the effect on the balance sheet will be on the current asset. We have prepaid expenses, the amount that was on the balance, additional information. So now your worksheet activities. The trial balance shows advertising 6,300. Additional information says advertisement expenses account for 18 months from the starting of the accounting period 1st of January 2019. Note there is no amount given in the additional information. You are supposed to use the timeline to figure out what is the amount that has been prepaid there. And you can see it says that the advertisement expenses, that is referring to the 6,300. That 6,300 is for 18 months. And you know the accounting period, the financial year is just 12 months. So the amount excess from the 12 months, you're supposed to figure it out by drawing a timeline. From drawing the timeline, you should be able to calculate the amount of advertisement prepaid. From there, you can show the general journal entries, profit and loss, and the effect on the balance sheets. So that is all on that the worksheet. I leave it to you to figure it out. That brings us to the end of the session. This will be available on YouTube. You can subscribe and like and subscribe, and share it to your friends. And thanks for watching. Hope to see you again. Goodbye.